All right, so welcome to the intensive March 23. Please don't use the Zoom chat during meetings if you're watching this recording. I just got through explaining this to our live crew here. Use our intensive group chat in the community. That's our hub. It's good to have everything there for posterity. We're able to review it easily. That's where we live over there. The Zoom chat, it's just a little pop-up that's distracting to me while I'm trying to trade or something like that. So we won't be using the Zoom chat. Cool. So welcome, guys. It's a great time of year. Everything's turning green, I guess, depending on where you are in the country. You might already be green or still snow, I guess. But these intensives are really great for you guys. Not trying to sell you. You're already here. I'm just speaking authentically to what these are and the feedback we've gotten from people about them. They're just super, super helpful because, you know, it's one thing to just learn concepts in a course or a book or whatever, but to actually see them applied by someone who knows what they're doing, it's pretty valuable stuff. So the format each day, we'll kick it off. So I know Ryan posts Eastern times or whatever. I'm Central time, so I speak Central for my language. So we'll kick it off at 7:30 Central US time. We're typically going to focus on pre-market prep, getting ready for the session. And then that'll just blend pretty seamlessly into trading the morning session. We'll do that together, and then we'll take a little break. We'll come back. We will do a midday Q&A session. And that's really the time to get your questions answered, right? So people didn't sign up for the intensive to watch me do a Q&A session when it's trading hours, right? People signed up to watch me trade, and then we also have the Q&A session. So when you're watching me trade, when you have a urgent question, when you'd like to know, why did I do something? What's up with this, that, blah, blah, blah. Jot it down, get you a notepad out, just like I've got. Do it digitally with Notion, whatever. But jot the question down, put a timestamp, make it specific, so that we can, during the Q&A, address that question together where it's appropriate to do that. So we don't want to, you know, mess with the flow too much during the morning sessions. And that's what the Q&A is for later. And then to wrap it up, 15 minutes after the close, 3:15 Central US time, it's time to do a review. I like to kind of do, just for sake of time, I like to kind of mix up what those sessions look like each day, depending on what I think is the most valuable thing we could kind of hone in on as a part of a review. And then other days I'll kind of try to walk through like a more full, you know, A to Z type review where we don't do a deep dive into anything. So I just kind of try to keep that meeting looser, and people have tend to appreciate that over time. Typically I will be sharing this monitor, screen 3, like this. This morning, one time, let's go through the layout, just so we're fully aware of everything. I've got this little drawing tool that is helpful. This is the yearly. Okay, so yearly VWAP, yearly prior value. I do have a little indicator running here that tells me what the moving average and each day's high to low range is, not including gaps, just so I can see how general market volatility is ebbing and flowing. And then on this chart, we have the quarterly. So I'm working down my chart, developing in prior. Obviously, we don't have yearly developing at this point in time. We are about to wrap up Q1. Monthly, below there, developing and prior. And then here's the weekly. I gave it a little bit more real estate because it's a bit of a more important chart for me. Need to update this here. And then I have my composite, right? So that's kind of the progression, right? And then we can go this way to just a regular daily TPO. And then over here is the intraday section, right? Kind of walled off from the rest. And this is the RTH and this is the ETH. Each of them having delta below. This is nothing. It's just, I could delete it right now if you want me to. In fact, I probably will. If you really want to know, it's a MACD indicator that I pulled up at some point and sometimes use for my teaching with students, just to show them, hey, you could use MACD as an indicator to time trades. With the point being, you could use just about any indicator or oscillator to help you time trades. Timing trades is not magic. Oh, Ryan, we do have a guy in the thread who's trying to figure that out. So I'm guessing you're already on that, but just in case. Okay, so that is the lay of the land in terms of chart layout. These are my charts, guys. This is not something that I tweak or hide anything or do anything different for the intensive that I do during my everyday trading. I used to need like 6 monitors for all my charts. And now I have 4 32-inch monitors here. And my charting, I do have an execution chart over on the side, which I'm not going to show you for account purposes and stuff like that, privacy. But one thing in terms of executions, for this chart here, the shortest term chart, I do have, as you can see, show order fills turned on. So you will see the fill markers where I'm long, where I'm short, all that good stuff. I'll also narrate it as I go. I will say, you'll know when I'm stalking long. It's just not going to be out of the blue like, hey, we're long, guys. It's going to be, hey, there's a long idea we've been talking about for 20 minutes. Let's see how this shapes up. Okay, now we're getting to the point where we might begin to stalk this trade. It's not just going to sneak up on us, right? So it's pretty straightforward. Yeah, so the email you would have, well, I'm talking to these guys that can't get into this meeting like they can hear me in the meeting. I'm gonna leave that to Ryan to help those gentlemen. Okay, news. There's no good news today, right? So I shouldn't say no good news. So I tend to just pull up Forex Factory and see what's on the docket. And there's nothing that I care about today, right? We do have a red one here. Over in the UK, got a Bank of England governor speaking. Don't care. Now, in terms of the news and handling the news, what might I care? Do I care what the news is? No. Do I care what the talking heads say that the news means or matters to the market? No, I don't care. I care that there is a volatility event at, for example, 9:30 or 10 a.m. or 10:30. I care for my risk purposes. As I'm trading, as I'm holding into some of these releases or wanting to be flat in front of them, that's what I care about. It's a risk tool. It's not a news or fundamental information tool. What else should we cover before we hop into the analysis? I think that's it. If I've forgotten something, we'll go back and talk about it. All right, give me one moment, please. Oh, never mind. All right, guys, let's hop into the prep. I can already tell you from glancing, those of you who are kind of existing students who've kind of gotten it around or been around and starting to get it, probably not too much interesting about this market today. I was curious, did I know where there were some questions about the DMI the other day. Maybe we can cover that some in the Q&A later. But I was bullish Friday. I don't think I did an official DMI. I just said I was looking to be long, unless, like, you know, momentum, price action, order flow, they all really broke down below, you know, areas or whatnot. And some people were saying that they were confused by that. So anyways, guys, if you're confused by my DMI or my commentary on Twitter, go to that dedicated room that we have for the daily DMI discussion, I think is the name of it. Bring it up. You're going to get peers chime in. You're going to get me chime in if need be, to get to the bottom of that. Let's hop into the analysis. Again, probably nothing too interesting here today. What's going on the yearly? We will hold off on yearly DVA because it's not, we're still in the first quarter of the year. So we'll just look at the quarterly DVA because they're the exact same thing. In terms of prior value, though, wrong type, what are we getting? We're getting a failure to break down prior value early in the year, a nice little wick through it again here, right? So in terms of prior value, this market is telling us that it's able to stabilize the lower end. Now, if we continue to knock on the door, right, guess what we're going to be thinking? Well, law 10 compression, right? That's what we're going to be thinking. But as it stands, I'm not saying that yet. I'm saying that we have held this in terms of a bullish support area, and we are actually working towards the other side of value. Now, how much is that going to come into play today or this week during the intensive? This is a very important point. Let me see you guys answer this in the intensive group chat, please. How much is the bullishness that I've described on the yearly time frame going to play into what we do trading wise this week together? Yeah, not at all, more or less, zero, nothing, not much because not directionally actionable, probably zero. You guys all nailed it. That's accurate. Now, if I was a portfolio manager long-term, just using NADRO to position my overall portfolio, I would use, you know, just like I would, like Friday, for example, I would use bullish sequences like that to position myself, knowing what the yearly's giving And then I could use that to then stay invested or swing trade or whatever until some of those destinations are hit and maybe peel some off. That's the cool thing about NADRO, is that you guys can apply it to suit your needs, to do different things with, right? Sometimes I swing trade, sometimes I scalp, right? For 30 seconds. Sometimes I swing trade for 30 days. You can do all kinds of things with NADRO. Anyways, the yearly is a little bit bullish in terms of prior value. We have an upper destination whenever we're doing narrative work, which, by the way, all this work that we're doing on this meeting, guys, is the work that I do each day to come up with these fantastic DMIs that you see. The end result, that's what we're doing right now, is we're getting there. We're taking our sweet little time with it, but we're getting there. Today, I will probably be more beginner talk, more longer winded on each thing, just because you're here to learn. I want to teach day one really much more specifically. Going forward, we'll probably, this time frame, this time frame, that, and really start to knock it out. So if you're a little more experienced, bear with me here on Monday. So we understand the yearly, but we understand it's less impactful to a high degree. So now let's look at the quarterly. As you can see, I've got some levels there from the past few days. We can adjust those. I'll just move this upper one down to kind of where the upper end of developing value is. And now we reach a little bit of a complex topic here in terms of quarterly. I need to get this, it's just in the way. I'm going to move it. We focus more on, when it comes to long-term VWAPs, I tend to focus more, as a rule of thumb, on DVAs over PVAs. That's just how it is, okay? That's kind of why they're there. In terms of PVAs, that's what I use market profile for the most part, right? Or for. I want to know where the market actually gave me structural prior value areas, and I use those in my analysis. Where the plus and minus one standard deviation ended relative to a VWAP periodicity, it works. Trust me, it works. You can just look at it, any chart, and you can see. But in general, they're for the developing, is what they're really most useful for. So I've chosen to focus on the extreme fade, the move to rotational on this time frame, right? I'm calling this high here. Holy smokes, how's that so big? I'm calling this high here an attempt at imbalance down. And I'm calling, once we went here, a move to rotational again. So this is a hold of the lower extreme. This is where I was really bullish from the other day. And this is where we're trying to get to. Is something in the way? You betcha. You betcha, right? Now, I was talking through this with advanced group mentoring students recently. We have been, we came up to this test of it, and then it looks like we reject it, and then we get through. And then even the hold is kind of messy here, and then we get kind of a clean hold here. Okay, so everything's good there. All right, now we're back to it. Guess what? We shouldn't be back to it, right? So it's not as bullish as it was over here. And now we're through it, and now it holds. And now we're way through it, and then we're way through it. Okay, so when we did this, I tend to kind of weaken the view of this market. Not to mention, we've been big macro through it a couple times. It's simply not a fresh, good, untested level at this point, right? With the last couple of days left in the quarter, we've just used it up. We've been above it and below it a lot. So in my mind, quarterly prior value is a little bit weakened from a normal state. All right, so real quick, just for those of you who perhaps joined late, whatever, please don't use the Zoom chat. I see 2 messages, a little pop-up for me waiting there in the Zoom chat. Use the community thread that we have, the intensive group chat thread. And then someone also put in a Q&A type thing. So we're not going to do either of those things. So Matthew Hart is asking, where is the group chat? Maybe Ryan could help Matthew Hart. And then Michael R is asking about the recording. Yes, all these are recorded, and you can reach out to Ryan for any questions with that. So you see that interrupts the flow. So anyways, I'm not getting on to you guys, just making that announcement again. We're not going to be using that. Use the group thread, please. So bullish from here, working towards here. And this is a chart that's actually, it's no longer a fresh ideal trade location trade. That's down here, right? That's what we got it coming into Friday. But it's still a continuation play with the caveat that this is resistance. It's not a bare line in the sand for me. So that's how I'm ranking and distilling those pieces of information. The dissonance, the conflict between this, right? And let's just say this, right? We have a bullish area here. We have, call it bearish area from here. How is Merit handling those? One of the ultimate keys to trading good is at NADRO and progressing and advancing, reading narrative, is ranking and distilling information. So I'm ranking, I'm distilling things, I'm deciding what's more important, what's less important. And here you are today getting my innermost thoughts on what I think about this quarterly chart and some dissonance that we have. Now, will I respect 40-40 as resistance? Yes, I will. But am I going to build a case for looking for this as my main trade of the day and the best setup? No, right? So that's the difference. That's when you see something as more of a neutral area rather than a big colored area on the DMI, for example. That's kind of what that signals to you. So you'll know what that means when you see that next time. Bullish quarterly. Quarterly is still a long-term chart. Quarterly is still a long-term chart. But it's definitely something that, you know, Friday and you know, still and until we kind of trade up into here, that's still got that momentum coming off that area for the bulls. Now we get to the monthly, and this kind of 40-40 general area is letting us know we got some problems. We got some overhead resistance here, which, by the way, when I glanced at the charts earlier, this is kind of, now we're getting to what stuck out to me as problematic in terms of lack of a DMI today, lack of a good, strong, lack of dissonant narrative today. Probably not going to have, but let's keep doing it. I haven't done full analysis yet. I just glanced at the charts. Coming off the bullish quarterly, let's go to the monthly. The monthly is pretty bearish, right? It's nothing crazy bearish, but gun to our head here, what would we like to be doing? Well, we'd rather be short, right? What's going on the monthly? Well, we have prior value, which we tried to hold into, that failed. I consider this more of a micro pullback, right? And I consider this the real pullback. Okay, so monthly is indeed bearish from monthly prior value. Let's make it a red line. Should have already been a red line on my charts. The DVA, right, our developing value, it turned bullish over here, right? Destination hit, excess at the destination. This was a nice, you know, resistance area for short. This would have turned bullish to now neutral, right? Because now we're just rotational. There is no fresh shift. So that's why it's less of a amazing bearish narrative. But we are near the overhead upper extreme resistance area. So, you know, like I said, gun to my head, I'd rather be short than long, obviously. So yeah. Might have been the trade of the day as we talk right here to just short this little up thrust pattern that breaks down with strong order flow behind it. But we're not trading yet because we're not done with our prep. So just to recap, the monthly is bearish from prior value. It's bearish, but not like fresh condition shift bearish, right? So ranking and distilling information, what's super, super bearish? What's the strength of the narrative, right? This one's not as strong overall, or especially when it comes to the developing value, which is where we focus on the long-term VWAPs. But it is at a resistance area, which is, we can already start to talk about confluence, right? We've got yearly VWAP, which is a minor reference. We've got our demoted quarterly prior value, okay? And we have this zone of extreme fade, upper DVA with prior value low on the monthly. That's all in the same location, guys. So we have a good bit of price confluence in this area. Let's go to the weekly. What is today? Today's Monday. So we don't have weekly developing value, but we do have weekly prior. Let's adjust these levels. I'm just going to delete them all. What do we have? We have upper end prior value here, lower end prior value here. And we have a market that is, from an acceptance picture read, still rotational with prior value. I know we poked a good ways above here. If we had a really, really good reason, let's say, for example, this is the connectivity of the timeframes. Let's say we'd step through yearly bullish, quarterly bullish, monthly super bullish, and we get to weekly. How might I use the weekly? I might get micro on the weekly on purpose. I might say, let's buy this thing and let's just look for this. Let's look for it to go here. But that's not the case. Let's say, for example, yearly bearish, quarterly bearish, monthly super bearish, weekly. Maybe this is just excess through these highs. Most of this rotation, right? This is the real read, by the way, is still below and inside prior value. So this is just a return pullback setup of prior value. And that is the way I currently see it. The market needs to show me something more holding above prior value than it currently has in order for me to shift that to a bullish read. So right now I'm looking at failure up here, destination here. How does this level of 40.24, right? Call it 40.24 to 26, whatever. How does that compare in terms of that price confluence with some of these other time frames? Right? So 40.34 to 40.55. Let's bring over this DMI chart. $34 to 55. Double check. What's this one? 24. Quite a wide zone here. This would not be where if I was putting out a DMI today, which I'm not, that would bug me. It would be just too wide of essentially, kind of a bearish type zone. But that is the gist of my thoughts so far, is that overhead resistance here in the scope of a quarterly who wants to go even higher. Okay. Let's continue with the analysis though. CVA, right? Now we finished the long-term VWAP. The summary there is a couple time frames reaching overhead resistance, even with the weekly, let's call it bearish, right? Unless it proves something above prior value. With the dissonance of the quarterly in kind of a fresh bullish narrative, with the caveat that the quarterly also contributes to this overhead resistance around that 40-40 area, 40-39 for it. So we've just got this wide range of levels. How many of them do we have? 24, 34, 39, 55, right? And then yearly VWAP, right, in the same area. So 4 or 5 levels, all kind of stacked and jumbled in this range right here. So it's messy, but it's overhead resistance. CVA. So our most recent CVA is this one, right? And then we have this next oldest and this next oldest and then that next oldest. So this one's the one that's most important, and we're about to open. You know, we got 28 minutes until the open. We're smack dab in the middle of it. It is a gap up from Friday, right? Friday took a look down into this this spot here, right at the open, boom, and then it stabilizes and holds this, traverses, and you know, continues, and then the overnight session, here we are. So this is bullish from 4008. In fact, you could even, if you want to be loose with the kind of some of the higher volatility, just the exact same way we thought of Friday, this could be a bullish spot, right? It's not necessarily 48. It's not necessarily 35. You could use it as an area, right? We wick that LVN is technically what this is, right? Kind of the same thing here. Right? Today we get open, wick this area, right? And work towards here. We see what happens here, right? So I do like the CVA today. It is weakened, right? It's not like we had day 1, day 2, day 3, and we've got this CVA, and then here we are today. That's not what it is. It's day 1, day 2, day 3, breakdown day, kind of reversal day coming back towards it, and now we're here. So just like that quarterly prior value level, below it, above it, right? It is weaker as we rank that information. Strength of narrative, freshness is a component, right? We ranked the recency of the CVAs themselves, but then for this most recent CVA, it's not as fresh. So 4008 is kind of a bullish spot. Let's put that here as well. So I'm not putting out a DMI today. You know, this is not a great looking DMI, is it? We're opening in a dissonant zone between some bullishness from the quarterly and the CVA, with bearishness from a handful of charts as well. This is one of the most poor narrative days that I've read in a while. There's been some days where I haven't put out DMIs as of late, and it's because we're kind of just hitting destination areas, things like that, after having great DMIs the day before or 2 days before. You guys have seen that pattern unfold recently. Today is similar to that, but with perhaps even more dissonance to it. Malo novel, there's the time right up here if you need a timestamp or something. So let's continue working towards a summary, a game plan, if we can come up with one for trading today. Now, given that we have all of these stacked overhead resistance type things, there's only one thing that points bullish at this point in time, and that is the quarterly, which is a long-term chart. Excuse me, the CVA as well off of 4008. We could immediately come up with a bearish scenario that makes a heck of a lot of sense, right? And that would be the breakdown of the CVA to then align us with the traversal of the weekly, the rotational month from resistance, things like that, right? You have to be able to put all these things together. So we're right here in the CVA. If we get this, right, below 4008, that's going to put us here, right? We're going to have rejected that and be working lower here. We're going to have rejected this and be working lower. You know, we'll be down this way somewhere, right? Working towards this, 27 and 39.62, right? We come back down to this quarterly level, 39.50s. That's interesting. That's interesting. This might turn into just a bear flag, right? And this whole thing, that thesis might end up playing out, but that's neither here nor there. We don't have to think through that necessarily right now. I will be interested to see what happens intraday here. Can this market begin to confirm an imbalance up, right? Which is going to be with holding this essentially like micro breakout pullback that we mentioned of this weekly prior value. So one scenario we can trade is this. Another scenario we might just go with the flow on is if we don't break down weekly prior value and we just keep, we break out higher from weekly prior value. I don't know how else to say that. We could continue to go with that imbalance cautiously. Why cautiously? Well, we got a crap ton of resistance and various references that we're going to be running into throughout this zone right here. If we do hold above 40.55, that is the all clear, right? We do run into our next CVA level and things like that. But in terms of narratives, that's going to be the first time we've broken above our most recent CVA, right? 40.55 is here, so we're going to have to see something even higher than this. It's going to be breaking back into an overall failure of this overall breakout pullback below monthly prior value. We're going to be holding back inside. It's going to be breaking back, you know, this quarterly narrative, getting through resistance, working towards its destination. And the weekly is going to be clearly, right, broken out from prior value and essentially imbalanced up and into, you know, Tuesday or whatever. Yearly, remember, it's also doing this. So we actually have a couple decent scenarios that we can look for. One is the breakout pullback of our composite value area low. Two is cautious imbalance up, which I really shouldn't say because that's intraday talk, but the overall breakout pullback of weekly prior value high. And then 3 is bullish over, I'm just going to, say bullish over monthly prior value area low, which, as we know, takes care of a lot of other things, as I just walked through. That's breaking out of the CVA, that's breaking out of the weekly, and that's giving us that there, which joins us with that and that. That's actually one of my favorite scenarios, really, because the downside, when our hypo 1, if you will, yeah, that's great, and we have a lot of reasons to do that, room to get away with that, but it goes against the biggest tailwinds, right? And so I do think about things like that in terms of, okay, when I get that nice alignment and everything working together, it's obviously better than when I say, all right, I can take some short-term things that go against some of those big narratives. I still do that. I do that all the time. Every week I do that. I'm going to jot these down in my notebook here. On a scale of 1 to 10, how strong are these hypos today? 6, 7. A lot of questions in there, guys. I'm not sure I want to insert what you think or are questioning my thinking right now about my game plan here. But I will answer Rashil. He said, could you quickly go over the second setup of the day again? That's a cautious middle ground setup. If right now my read is that the weekly is just testing highs, and if we start to, that we have not accepted above weekly prior value yet. Therefore, this little failure above these highs is a bearish area to work towards the lower one. So it's simply saying, if that doesn't happen, if we just hold above weekly prior value and let's say intraday sets up right with imbalanced pullbacks, order flow looks good, all those kind of things, we can cautiously, because we know we're into overhead resistance, not the best bearish narratives we've ever seen in our life, but definitely some overhead resistance. But I am willing to cautiously trade long if the scenario presents itself that the weekly tells us that we can't stay rotational for the week, that we're breaking out higher for the week. We can cautiously go with some longs there. So really hypos kind of 1 and 3 are areas where we get kind of the all clear go ahead signal for the most part to really take trades. Hypo 2, which would have, the reason it's hypo 2 before hypo 3 is because chronologically it would present itself before hypo 3 would. Hypo 2 is us holding over 40.24 essentially. Hypo 3 is us holding over 40.55, right? We're currently trading 40.25. So the 20s are going to happen before the 50s. That's why it's hypo 2 before we get to hypo 3. Hypo 1 is almost always the strongest hypo for me in terms of does it matter if one's hypo 1 versus 3 or 2? And then kind of 2 and 3 tend to fall in line with what could chronologically occur next from where we are as I'm doing the prep. That's just it's not really important. It's just kind of how I tend to think of it. If a NADRO student had gone through their prep and they felt more bullish, you obviously can't deny with the poor trade location on the monthly, but that led them to want to be more bullish than right here, right now, maybe even a few seconds ago when I started talking. You could take this long, right? Imbalanced pullback of intraday, a micro breakout pullback of weekly prior value. You're getting on board with, again, micro on the weekly and the continuation play on the CVA, right? To align yourself with kind of quarterly, yearly narrative. That's fine to do. Monthly is a problem, but I do think that you could put enough together there to justify it if you wanted. So you see how cool that is. Maybe some of you are thinking not so cool about depending on how you rank and distill, how you weight various variables as you do your prep. You can arrive at trades that are justifiable and you can get away with. You're still putting together some things. You're still, just like I am, just like anyone else. And when there's an area of dissonance, we're going to end up compromising a few things, right? And that's the beauty of this. This is why I'm able to do this in front of you, talk about it in front of you, have a course, things like that, is because it's so discretionary. More days than not, you can ask any of my students, we end up with the same DMI type prep. If you're good at what you do, we end up with the same. Days like today, where there's in general less opportunity than great days, right? So we're already reaching a little bit to come up with something. And by the way, the goal of prep each day, I'll go ahead and tell you today, it's not to come up with, to force a great narrative, to come up with like, what's a great trade for today? Some days there are no great trades. Today is essentially one of them. But we have enough where we can put on some trades. For me, you're probably going to see me today taking more profits quicker with my trade management tactics because of this environment. If I'm getting long the continuation of weekly breakout, knowing that it's a horrible place to be getting long on the monthly, I'm not going to leave 80% of my position on for a core long position and just hold it. That's not what today tells me is smart. I'm going to be more tactical. I'm going to be more taking quicker profits where they're available. 10 minutes until the open. I'm going to get some water and I will join you shortly. All right, we back. So as we are 3 minutes or so away from the open, essentially we have no stalking trade ideas that we're looking for. We could see this imbalance hold, which is going to tell us that the weekly has enough strength to start to break away from weekly prior value. And by the way, in general, last week's, I think someone mentioned something about the kind of the structure from last week in the chat. And they're correct that we have a singular value area read off of what's essentially a double distribution, if you will, kind of, right? It's more so like a bigger distribution with kind of a little bit of a flat area to it. But anyways, if I were to look for the best two edges of weekly, here's the profile, right? It's really up here and down here, something like that. So these areas aren't the best as we assess the quality of weekly prior value. Again, further weakening this day's narrative read. So maybe, I mean, I feel bad for a brand new Nadro trader coming in and listening to what I've said today. I feel bad for you because it's like, what? So what are we doing? Think about it though. Let's take this day from a much more simple approach. The most simple approach could be, I've done my narrative work here today, and this could be something that one of you might arrive at. And what I arrive at on plenty of days, I have a little, this could be a negative thing for us here, guys. I have a little bit of an incentive to find something and to trade for you guys because it's intensive week, right? Might be a negative thing. I'll have to stay self-aware on that and try to make sure that I'm still trading my best and making best decisions with the right motivations. It's important. But some of you today might have come in, let's forget you were watching me or anything, and you might have said, I don't see anything that makes sense, right? Obviously, like, there's things that make sense individually, but for those of you who are putting together these timeframes, oof, we got competing stuff here. It doesn't really make a lot of sense in terms of clarity. You would be correct. And if you made the choice that, you know what, I don't have great clarity today, I don't have anything I really want to trade, good for you. Good decision, right? Go do something else. Go trade a different market, right? Maybe crude oil, NASDAQ, gold, soybeans, the 10-year, whatever. Maybe you can find something there. When I'm doing the intensive here, at least in this volatility environment, I tend to find plenty of opportunities if we just focus on the S&P, which a ton of people focus on. So it's something that's just relatable and we can go through together. It tends to make for a good, intensive week experience. But in general, something you can do, something I do during various periods of my career is I look at a bunch of different markets and I go trade something where I do have more clarity. So it looks like we just opened, correct? I could tell when the market opens without looking at the time. You just see that little activity flurry. I will comment a good bit on order flow. That is only because it's something that happens more frequently, okay? So when I'm doing these intensives, I tend to just let you know what comes to my head, let you know what my eyes see over and over throughout the session. It's not that I'm honed in on order flow and going to make a trade decision based on that order flow until we're in a setup type of an area. But I will comment on it, but don't let that mislead you or misguide you into thinking that that's all I care about. What I'm doing that some of you I've seen students have a hard time doing is all that prep work that we just spent, almost an hour going through. It's tucked in the back of my head right here, right? It's tucked away. I keep it in the back of my mind. I'm able to hold that and almost compartmentalize it and then focus on some other things which are more short-term and whatever, but I don't forget that platform that we've built, that in the back of my mind narrative. And I'll continue to reference it. It's not like we're gonna, just forget about it for the rest of the day. Sellers continue to press. They are being absorbed by a passive buyer. I would expect us to at least crack through this level a little bit, kind of see what happens. So at this point, I give these sellers to get squeezed, to ramp through, squeeze them out, at least run, stops above 29. They were pressing. They got one tick below these lows and they failed. We start to see a momentum shift, something of a squeeze there. This is also very flaggy. Which are all bullish factors currently, immediately. But you see, we're on such an edge here of what do we think about the market? It's so easy in my mind when I think, all right, what if the buyers can't take it? What if we start pressing those lows at 24, 23 again? Man, it just, you immediately hop back on board that mentality of around, we're at some overhead resistance. The weekly is technically still bearish. If we start to crack through there, that could be, such a lovely kind of place for given what we have in front of us here today, right? Which is a lack of high quality narrative. It's something that, if I'm honest, I struggle with a little bit internally here as I'm trying to put my best foot forward for this intensive. I do give myself a lot of freedom in my own trading at this day and age. On the intensives, I do try to be a little bit more by the book, just so it's more relatable and translatable to students. So we did tick through 29 there. Took a while, but it seems that the squeeze is in full effect here now as we see the aggressive buying on the delta there finally kick in. You've probably already noticed this, but the RTH chart is time based. It's a 3-minute chart. The ETH chart is volume based, 3,000 volume, which is fairly quick for the S&P right now. I think for a lot of students, you're much better off with like a 5,000 to 8,000 volume chart right now in the S&P. I've been scalping a lot more in these conditions, so I've dialed in my time frames over the past 8 months or so to where I'm looking at some pretty quick moving time frames. Oh yeah, it's just about to say that could be the end of the squeeze. Sellers might take it there, and that was like boom, you know. I could really see myself taking a little scalp short here. I'm going to pass on it. We're going to stay more with the plans here today, but just given the dynamic and leaning more towards what is right, especially on that weekly time frame. It's more of a bearish area with the bullishness of the CVA just below. Order flow could easily work back to delta neutral, so still, 2,300 contracts to get there. My process goal today is to simplify my trade management. I want to really scale out in a simple way, essentially into thirds of my position. About to sneeze. Through working with some of my students and traders lately, I have pointed out to several of them how they were overcomplicating some of their scaling out of profitable positions. And it actually got me thinking about my own scaling out and how I could see some of myself in what they were doing. And so that's something that I want to kind of try to implement as well. All right, so what have we seen so far today? Since the pit session open, we've seen order flow, which is sideways, down, up, down, up. It's gone nowhere. We're right back at kind of the opening print here right now. So price has really gone nowhere. We didn't go down with the initial order flow because there was a passive buyer. Then we squeezed. Then there was a weird little blip in order flow. And then the sellers took control, and now the buyers are surprisingly ripping back. Okay. So really nothing interesting or telling about what's going on. The thing that's interesting or maybe telling about what's going on is that there is no great edge or one-sidedness or strength or something going on with the order flow. It's a back and forth, a little bit of a fight, not much going on. Guess what type of days we tend to see this type of stuff happen? Days where there's dissonance in the narrative read, days where we don't have something that's a clear directional bias with clear price confluence telling us long, 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 or short, short, short. We don't have that today. And guess what? We're seeing some mumbled up, jumbled up price action. And that, my friends, is worth its weight in gold. If you, again, going back to pre-market, the goal is not to force clarity where there isn't clarity in narrative read. The goal is to identify when and where we do have clarity. And knowing that you don't have clarity is essentially just as valuable. This is something that takes people years to understand. Knowing the lack of clarity is equally as valuable as knowing the clarity. Why is that? Well, if you can avoid a 1R, 2R, 3R, stop out, stop out, stop out unnecessarily, that's as good to your overall equity curve for the month, for the quarter, for the year as a 3R winner. It's the same. It's the same thing. So it's not as sexy, is it? Talking about avoiding losses, but trust me, it's equally as valuable. I think it was Benjamin Franklin that once said, a stop out saved is a stop out earned. 1R saved is 1R earned. So buyers strong here. Makes sense. We could see a stop run through these current pit session high and overnight high, right? Just to go grab liquidity, stop out people who are positioned from those areas. Is it a tradable opportunity? No, right? Is it something that's part of our plan? Something that's, no, I'm just pointing out, as I mentioned, the shorter term features as we trade here. A little bit of passive selling, absorbing the buyers, still happening. You see how high this delta is pushing right now on this candle, and price isn't lifting. You don't need a footprint chart to see that. That's something that, I almost don't even want to tell you. It's so powerful. People think that you can't see absorption in cumulative delta. And that's just because they don't know how to identify it. I'm sure if I was staring at a dome, I would say they just lifted, and then that's how they blew it through. 10K delta at this point. Quite ran that overnight high yet. Yeah, all the sessions are recorded. You'll have access to them. I'm sure Ryan will get with you guys and let you know exactly how that'll work. Aggressive buyers still present. Looks like we touched the same tick as the overnight high at this point, which found a little bit of shift in terms of who's dominating the tape. Small fry stuff there. Nothing significant. Perhaps another scalp short opportunity there if the bearish thesis from this area is, super important for you this morning. Good bit of bar to bar overlap though on this turn, right? What do I mean by that? Instead of coming up and just seeing, let's say, for example, the turn that it's tried right here, we end up seeing 1, 2, 3, 4, 5, 6, potentially 7 bars here right now that essentially, right, don't do anything. Bar to bar overlapping, which makes for messy trading because there is a lack of clean momentum driven price action. What does our rhythm look like today? Right, which coincides with a lot of what we saw coming into the weekend. Right, doesn't have to be rocket science. Something about that size, right? So this is a nice full move here. Order flow shift. Let's keep an eye on 10K, see what happens. But again, messy. There's that box I drew earlier right there, right? There we go, dropping out of the bottom of it. Like I said earlier, if you really like the short, this is an area where it makes total sense to do so. It's an extreme fade intraday setup. You're in rhythm. It's from an area where you can claim that there's resistance. We have not accepted above weekly prior value. But you got things that are against it, right? Namely, the most recent key recent rejection on the CVA and the law of market dynamic there is we're trying to get to 40.42. Messy day. Beautiful movement there off that high once it finally kind of worked the junk out of its system. Most dominant we've seen sellers so far today. my intuitive, self tells me you want to be involved with this short from here. It's just not a part of our plan here today. As I've mentioned, I've been doing a lot of scalping over the past 8 months, 1 year. There is the idea even of a full-on supplemental scalping course being done. So that's something that's being, thought of and thought through and whatnot, if that makes sense. And you'll see me do some scalping over this week for sure. It's not all just going to be sitting on our hands waiting for hypo trades to set up. You will see me do some scalping. I will categorize it as such, and we'll make it pretty clear. But anyways, what my main point there was around listening to myself, being aware of my thoughts and desires, essentially, right? I felt the desire the first thing I said there was my intuitive self wants to be short, right? So I listen to that. I don't just go act on it. I listen to it and I try to understand where that comes from, right? It's not enough to just be some intuition-based trader. You need to understand what are the things that are stacking up, if any, that tells you that. Where is it derived from? Where is it coming from? And then you start to learn more about markets and more about yourself, because sometimes it's coming from some great MGI, market generated information. And sometimes it's just your little monkey self, right? For those of you who are familiar with books like The Chimp Paradox and things like that. We could call it more of our primal self, right? More of your emotional self, whatever you want to call it. That can really mess up your trading. For the extreme fade short, would you aim for developing value low as a target or the composite value low? Well, it depends on what the trade is for you, right? It's not, as we've kind of touched on throughout this session here, if you ranked certain information higher than other pieces of information or whatever, you could have a certain plan or whatever. If this was just a momentum scalp, you're already out, If it was a key positioning from wicking the overnight high extreme fade from the upper end of the weekly, there's probably nothing on your radar until the lower edge of the CBA, and then hopefully the traversal of the weekly, right? So with opportunities to add on the breakout pullback below composite value low. So it just depends on what you wanted, the way you're structuring the trade there. Your time frames matter, right? So we're not going to turn this into a Q&A here, but I just saw that. All right, B period is upon us. When you look at my charts and in my DMI charts and you see that A, B, C, D, people are like, what the heck is that? B period starts the second 30-minute period of the day. A period was from 8:30 my time to just now 9 a.m. or 8:59 and 59 seconds, we should say. And then from 9 a.m. and 0 seconds, that starts B period, and that'll go to 9:30. And then from 9:30 to 10, we'll have C period. There's just 30-minute bars, and you just lump them all together to form these little distributions or profiles. And so if we split them out, it doesn't really matter, but we just started B period. B period is now in the middle of our most recent CVA, just like where we opened. It is in the middle of a ranging of higher and lower A period. We are saving ourselves R today from a lack of aggressive trading. In my case, a lack of trading at all. We are saving ourselves R's. Sure, could we have taken a couple scalps here and there on some little rhythm, DVA, order flow stuff? Sure, right? I kind of narrated a few of those as I saw them. Is short, I think, still the play here? Yes, I do think so. Sellers telling us that they're not done even as we speak. If B period comes down to equal the A period low, the probabilities tell us that that low is not going to be the low, right? That we can actually traverse, let's say, the overnight distribution. We can push towards this composite value area low, right? Which is going to be a much lower extreme of DVA. So anywhere in this zone from 15 to 8 is kind of a spot that makes sense if the sellers are going to able to maintain dominance, as we've seen. Failure of 10K, sellers in control of the tape aggressively here. Yeah. We go back to rhythm, right? The buyers have supposed to have been having their turn here, and they're kind of having a hard time doing so, right? It's buyer's turn. And here, as soon as I say that, now we're seeing some decent buying on the tape there, but they got stuffed as soon as I said that. So again, buyers struggling to get their move higher in, which leads me to think that probabilities are, stacking towards just kind of a little crack breakdown here imminently. And there it is. See the order flow shift. Plenty more to go. It's not done. We'll run lows. So you see, these are little opportunities that are scalpable if you start to understand the dynamic of within the context of context within the context of the narrative, right? I don't care how much scalping I do, narrative is, again, something that's in the back of my mind always. But there are little opportunities where we can see people who are about to get run over, people who are trapped, things that are attempting to happen but not happening. All those kind of things are potentially components of what we teach in the potential scalping course and stuff. Not quite a poor low on the session. Certainly have better excess at the high than the low. We have what could be considered a weak low because we only have one TPO period of A, which is hanging out below the AB, right? And as I mentioned, 5-10 minutes ago, if we get B, which is this at the same level of A, that's a poor low, and we can expect further downside movement. It's time for buyers to do something though, right? Sellers have really been kind of dominating. It makes sense that we would see a rotation higher here. These highs look vulnerable to a little stop run above 26, 27. So it would make sense for buyers to be able to rotate us up, run those little stops through there. Does that change context? Does that change anything? No, it doesn't. That's just a commentary on the shortest term ebb and flow. Internally, I'm feeling like almost like a biological clock, that it's the intensive that I need to trade. There needs to be trades. So I'm going to have to continue to battle that and not let it wear me down and make a poor trade. if the buyers continue to not be able to take this higher at all, and there's a decent, clean enough turn, and order flow is still weak from buyers, I might be compelled to do a scalp short. We are starting to see a little bit of wicks at the lows for the session, as you can see from especially the time-based chart, the 3-minute chart is essentially 3 pretty decent wicks on the lows. It's just a minor point, but the bigger issue here is the lack of buyers being able to do anything. I essentially missed the entry there. So don't want to chase it here. It's not strong enough conditions to be shorting a new low kind of area, looking for just more. This is a back and forth sideways day so far. So smarter not to do it. Trade location would have been middle of DVA into essentially ETH VWAP minus 1.5 RTH, which you can get away with if it's, momentum based, but again, just not great momentum here today. So makes sense not to stoop to that level. If I would have entered that, I'd be scratching out of it before we run stops above these areas here, right? Which we just now or did. If you're taking a momentum based play, you need to be out if the momentum has shifted against you and the tape is shifted against you. There's no reason to be the person that it gets stopped out, where you can obviously see, as you learn to see what's obvious, where other people are stopped. Not much buying on the stop run. Seems to be that it was just a stop run. There we go. I actually had my fingers on the trigger there. I really wanted it again. Now we've reached the lower end of the, quasi overnight balance. We've reached developing value low. And that's probably a decent excursion, if you will, for the moment. Why did I put my finger on the trigger and almost short after talking through how there was a lack of momentum and didn't want to shorten that area? Sequence of events. see if someone can answer me in the chat. What was different about that last turn compared to the turn before that I talked myself out of shorting? What was different about this last one that made it to development value low? That's correct. We got a smart group in here today or this week. Stops had been run. Think about it, guys. It goes back to big picture narrative, market profile, auction market theory. There was a lack of excess on these highs, and there still technically is, but you get a stop run through that area off of nothing buying. So it's not like it's new business being done. It's just a stop run blip. Order flow shifts right back in favor of the bears. That is a backstop you can use. That changes the probabilities dynamic of what we could do next. If you don't have the stop run there, you got to worry about it being there and needing to go there. They act, they're like little magnets or whatever. Just like poor highs or poor lows on a profile, just like law 10 compressions on higher time frames, whatever. It's all the same thing. It's just different time frames, different ways of looking at it. Very good answers. You guys are going to have to forgive me for only verbally trading about 4 scalps today. I'm sorry. I'm the old bull in the joke. I'm not going to say the joke. You can look it up. But the young bull tells the old bull, hey, why don't we go down into that pasture right there? If you don't know the joke, you can go look it up. But I'm the old bull here, waiting for taking my time to do something better. It's a pretty good joke. Yeah, Jake brings up like a footprint, perhaps some, it would not surprise me at all. I don't have a footprint up. But if, like, for example, right here, these 2 bars into this bar as well was like an incomplete auction where the offer had actually lifted, but then couldn't trade. And then so we have bid volume at the same area. And then this makes that nice and tidy, cleans it up. That's probably what happened there. I don't even need a footprint chart to see that, right? There's ways of just looking at how it unfolds in real time. It was the high just on the left of the ones you touched on 26. Oh, so it was all the way back here. That's interesting. But either way, the way that we stacked in here and here, the way that buyers were due for their rotation higher, hadn't been getting it. It just makes sense to clean that up and then look lower. And like I said, that's probably a good enough excursion. So you can see a little bit of passive buying at the low. See how we made the low, and then the next two bars actually have negative delta, even though the price was moving higher almost as quickly as it'd come in. So there were still people trying to sell those lows. And guess what? They're not as smart as us. Those traders got trapped because they're thinking, oh, look, momentum, new lows, let's pile into it. And you got the old big bull with the experience saying, you're not that guy, pal. This is not the situation for that. And they're just absorbing the sellers that are piling into them. And now they're profitable and the sellers are stopped out. Someone answered someone's question. We'll get to all that stuff in the Q&A, guys. But just to be clear, it's inaccurate. I do not judge momentum based on delta order flow. That's not something I do. I will use order flow to help assess the strength of moves or the lack thereof, or whether there's passive participants or what's going on. But the momentum is the momentum in price. So again, even the buying that we've now seen off of development value low, if you do look at delta, the buyers were weak, right? They didn't bounce very much. Just a reminder as to the overall view of what's going on. There it is, right? Four or five stacked bearish / resistance areas in here. Bullish CVA level there. All clear longs above the upper edge of this zone. All clear to short below the edge of this zone. Leaning more bearish than bullish with some of the multitude of references from this area, maintaining especially that bearish acceptance picture read throughout the morning on the weekly prior value. Whereas I know some of you get very caught up in shorter term acceptance picture reads. And if you look at this with the benefit of hindsight, we were just never above acceptance above weekly prior value high. So there is way less opportunity for anything now at this area than there has been essentially at any other point since we've been talking. At least around the open, we were assessing, hey, can the weekly kind of hold above prior value on a micro basis and get imbalanced? And then obviously we were talking about the little messy boxed area, short turning opportunity up here, and see what happens with 10K, extreme fade, good rhythm, blah, blah, blah. We had the little potential short here, which we didn't liked it better once we cleared excess here. And now that we've ran down here, guys, I mean, you know, essentially might as well end the stream here because there's really nothing right now. If we start tanking here and we get below 4008 composite value low, that's one of our better opportunities of the session. So who knows? We'll see. Delta marching towards delta neutral down here. Intensive week is not about entertaining you. That's not what I'm here to do. I'm here to let you know how it is, let you inside my head see what my thoughts are, and you know, this is possibly the first intensive day, you know, and let's say 20 days of doing intensives. If I'm just ballparking, you know, we've maybe done 4 of them. That there's ever not been a trade put on. So I apologize that, you know, I know you guys want to see the trading, but I can assure you that the thought process around not taking some trades and things like that is still very valuable for you to see this. So within the context of the bullish quarterly/yearly big picture movement, we're seeing that stacked 4 or 5 reference overhead, the upper end of the monthly, the weekly, really just do their thing here. And we did get that failure above those kind of highs from right here on the weekly, right? Overnight. Failure, a little extra failure, and then pushing lower. And now we're about into our first area of major dissonance, which is going to coincide with kind of delta neutral. rhythm read. Let's give you a medium-term rhythm read. There's medium-term. Shorter term. I'm trying to give you something here. Oh, me. It's going to bode well for the short guys if we can really crack through delta neutral. Maybe get that on a retest or something, which might coincide with this point. It would be fast trend, but hopefully it takes a little more time to evolve so that we can get developing value, right? For this. That would be really nice, wouldn't it? And that is our hypo 1. So here's a teaching point. Instead of anticipatory thinking, instead of me thinking, oh, what if we just crack through here and blah, 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 or what if this, or what if I miss this, or what if it does this without me, or whatever, and then making bad decisions. I am looking ahead, but more so from a planning and preparation perspective around what might this look like if I get the trade, which I talked about potentially taking before the open, right? If we got it. And so we're not there. The acceptance picture is not there. The trade is not available. And I know that, but I'm just taking a look at what it might look like if it presents itself. I will go ahead and address, there's been a couple questions regarding some things on the chart. I have to answer this every time I show my charts right now. There are essentially two things on this intraday chart here, which are not a part of NADRO. They're not a part of my process. They're things that are just purely experimental. I'm always looking at things and analyzing stuff. I'm not always just, and there we go, delta neutral, 4008 quarter to the tick. And we see some buying start to come in from there and price respond away from there, right? So lets us know that NADRO is a very, very beautiful thing. But anyways, the red and green colored bars on the ETH chart, that is something that was part of me experimenting as I developed the, it's essentially pieces of, some of you, you should all follow me on Twitter. If you don't, it's at Merritt Black, MERRITT. I developed an algorithm in NASDAQ, and it's essentially components of that. It's mostly based around kind of shifts in order flow, meeting certain conditions and whatnot. So the green ones are kind of bearish shifts in order flow. Did I say green? I meant red. The red ones are bearish shifts. The green ones are bullish shifts, essentially in the tape. Again, it's not something that is a part of my process or anything like that. It's just something that I'm, tweaking, experimenting with, trying to learn more. So it's not going to be something that we go through together that I teach you guys, because it could be trash, right? It could be utter garbage. And then I have a hangover, something that's been on my charts for a while that I don't really use. And that is essentially this like VWAP type thing, which is actually on the delta. It is just the same, you know, ECI VWAP indicator that's on delta as well. Excuse me, that's on price. Does it work? I don't know, right? Well, it held VWAP here, right? It kind of held development value high there. It held VWAP on this little retest. I don't know. But it's not something that I'm leaning on. That's a part of my process that I'm really using. It's just something I haven't deleted off my charts. So that's what those things are. Someone said, are they going to be a part of the chart book that you get? No, they're not, because they're not a part of. If something's on the chart book, it's because it's a part of the process. It's a part of the course. It's a part of what we teach. It's part of what we use, right? This stuff, there's always going to be things that are rotating through my charts that I'm experimenting with and doing and whatnot. And those are the two things that are there right now. If you want, I'll take them off the chart. I would be happy to do that so they don't cloud, you know, any kind of view or anything. Right? So at this point, we're essentially looking at like, if a lot of times looking at the split out over here, the split out TPO chart can give you a nice sense of just how long something might take to unfold. This could be very valuable for some of you. If you're looking at thinking that, oh my gosh, I have to be ready right now at any moment. Well, there's some selling. Maybe we should get ready. For this breakdown and trade below 4,008, hypo 1. I think that it might take an hour for that trade to set up. Why is that? Well, we've got 20 minutes left in C period, right? So we might get like the breakdown in C period, maybe not, right? It's not a fast-paced day here. Maybe D period breaks down and E period gives the retest. FGH moves lower, right? These things can take quite a while to unfold, and looking at those 30-minute bars and how and doing the work that I talk about in the course where you split it apart, you look at how it moved relative to your CVA structure that you've recently created, you put it back together, you decide merge or no merge, go to the next day, split it apart, look at how it moves relative to CVA structure, put it back together, merge or no merge, next day, that type of thing. Now I'm telling you, you can also start to connect time with opportunities in terms of how long does stuff take to actually set up the real trade, not the micro one, not the FOMO one, right? But the real one that we would review at the end of the day for my DMI recap and say, I loved the retest of the highs of D period here for this short. Those trades, the real ones, right? They take longer to unfold a lot of times than we might like, right? Yeah, misspelled Stewie. Yeah. Fabian, totally giving you a little light hard time there. You're probably English is your fourth language that you speak. But if you guys have ever watched Family Guy, which I don't really, but I watched it enough back in college to know that Stewie says, what does he say? Oh, cool whip, cool whip. Things like that. He puts a WH on the, so we're whicking the highs. We're about to whick these lows right here. Here it comes. Ready? Ready? Boom. So unable to leave delta neutral here, guys. So now we start to plow through it. Lack of buying. So on some time frames, how could we consider this a buying opportunity? You could. I think there's enough against it to pass. But if you're someone, for example, who's maybe very early stage NADRO, or maybe at a place where you've just simplified your trading to just the core structural stuff, you don't like, there we go, Ryan, thanks for the link. You don't like the long-term VWAP stuff, whatever that might be. You're focused on market profile, maybe volume profile. This is a fresh return pullback of our most recent CVA. It's at the lower edge of the overnight balance. It's at a lower extreme of a rotational intraday, and it's delta neutral. What's not to like, right? If that's how, again, I keep doing this where I say, look, guys, there's a lot of different ways you can trade NADRO, right? And if this is your niche here, you can do this. If this is your niche over here, you can do this. You can get away with it. I'm approaching it from the way I see it, the way that I piece together the time frames and the type of trades that I'm looking for. But one of the most beautiful things about NADRO is that it is just a compilation, an amalgamation of frameworks for seeing things. And you get to ultimately, I think, first be unoriginal is a good piece of advice. Try it the way I kind of teach it, just straight up. And then you can start to develop a niche. You can start to make it your own. And that's a really cool thing. I'm actually gonna have to watch this clip, Ryan. I haven't seen this in like 10 years. Okay, buyers, there was like a small trap lower right here. Buyers responded with some swift action, some delta behind it, and then right back to delta neutral. So it's just like any other concept in trading. If this is such an advantageous place to buy, right? You could think of it as delta neutral with order flow. You could think of it as the breakout pullback on a micro basis from this weekly area. Why are we coming back to it here? That's pretty natural. Okay, why are we coming back to it here? Okay, why are we coming back to it here? Right? We're not leaving the area, and that results in kind of the other narratives kind of doing what they want to do on other time frames. If we're coming into this area, you know, at least twice here, why are we not leaving this area, right? It's a poor low in order flow, right? It's the same concepts, right? I'm not reinventing the wheel here. It's where do we have excess? What prices are participants seeing as very advantageous, right? Go back to my teachings with, you know, Toyota Tacomas being sold. Well, if they keep coming down from, I can't even remember how much they cost. I own one. I think 40,000. You know, if it keeps coming down to 39,000, 39,000, 39,000, and there's volume being done there, one can probably be sold for 38,000. One can probably sold for 37.5, right? If there's if we keep coming back. Now, if we come to 40,000 or whatever I said, and like there's only one available at 40,000, and then boom, we're back up at 45,000, and there's a bunch of trading there. Well, guess what? 40 was the advantageous price that some lucky buyer got one below value, below where most of the bulk of trading and volume is occurring. That is markets, no matter if it's cars or stocks. Some of you newer NADRO students might be saying, hey, let's short this kind of imbalance pullback here with this, right? You're telling me that the buyers aren't leaving this area. We're probably going to poke through in terms of order flow. Let's short the imbalance pullback. Well, guess what? That's a horrible trade location, guys. Right? This is not an area to be getting short into. That's kind of the predicament of the day here. This is a place where one time frame says to get long, another time frame is saying that yes, the short is working. And that's why we had the DMI just like this. Well, we have a short that's working from here, but now it's a problem into this. Well, we have a long that was working as we got up into the here into the open, but it's a place where there's resistance and bearishness. So it's problematic to be getting long up there, even though the bull thesis from here was working. So hopefully for some of you, this is like, wow, it's all coming together. I now see what you were seeing pre-market and how it was problematic, and now how it's problematic as we assess the trading throughout the day, or lack thereof. And again, I'm sorry there's no trades here today, but I'm not sorry because it's a good body of work from me here today. It is. All right, guys, almost 10 o'clock here. Nothing really happening. Now, if we break down 4008 at some point in the next hour or so, that's going to be an opportunity. That's our hypo one. I will, ping in the chat or whatever and let you guys know what I'm thinking and seeing there, but probably a waste of time to sit on the call further here. Typically 10:30 is when we kind of wrap up the morning session. So we got a good, 2.5 hours here of prep and monitoring. No trading today. Again, I'm sorry. There'll be plenty of trading throughout the week, I'm sure. So for those of you who put in questions in the chat I didn't get to because my focus was elsewhere, bring those up in the Q&A at noon Central, 1 o'clock Eastern, and we will see y'all then. I'll update you if we break down 4008 or see some other type of thing. Yeah, cheers. We'll talk soon.